What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen, founder of Wolves of Investing. If you want to learn how to achieve financial freedom through investing, be sure to click on the subscribe button if you haven't already. Today's video, I'm going to be going over my monthly M1 Finance portfolio update for June 2020. Before I get into my portfolio update, I know there's a lot of stuff going on out there. There's still the coronavirus going on, and there's the killing of black people by the police. And as a person of color, as an investor, and as a human being, I want to tell you guys, do Black Lives Matter? Hell yes, Black Lives Matter. And I want to let you guys know that my videos are meant for anybody, no matter what the color of your skin is, no matter if you're a man or a woman. I believe that anyone can achieve financial freedom through investing. So without further ado, let's get into this month's update. What's up, everyone? So here's my M1 Finance portfolio. The current value is just over $1,300, and you may see this fluctuate a little bit during this video because I am filming this during market hours. Let's head on over to the holdings. So I've currently got 11 positions. My cost basis is $1,059.86 for an unrealized gain of $251.44, or a cumulative return of 23.72%. So those were my cumulative returns. And I want to thank one of my viewers, KMS007, for letting me know that I wasn't showing my cumulative returns in previous videos. So from now on, I'm going to be showing my cumulative returns under the holdings. And cumulative returns are super important, of course, because you want to know whether or not your account is profitable. But for this account, because I'm constantly adding new money every few weeks, the time-weighted return or money-weighted return is extremely important to me. The returns on money that I put in last week are weighted differently than returns on money that I put in a few weeks ago or a few months ago. And M1 Finance calculates the money-weighted return for you. And if you're dollar cost averaging into a portfolio, I feel that the money-weighted return will give you a more accurate depiction of your portfolio's performance. So my money-weighted return since I opened the account in August of 2019 is 63.46%, and over the last month is 10.58%. So now let's head on over to the activity. So I made a purchase of just over $100 on May 18th, and I made another purchase of just over $50 on June 12th. So last month I said I was going to go to $100 every month, and instead I'm going to $50 every 2 weeks. And I made a mistake last month saying the reason that I was going to go to every month was because it's a taxable account. I didn't want to have to calculate the cost basis on tons of trades. But most brokerages, including M1 Finance, will calculate the cost basis for you. So my bad, guys. So let's take a look at my purchases. On May 18th, I made these 8 purchases: Illumina, Broadridge, Beyond Meat, Trade Desk, Moody's, Amazon, Republic Services, and Mastercard. And one was excluded. Paycom was excluded. Whenever a purchase is going to be less than $1, M1 Finance is not going to make it, and let me show you why. The purpose of this minimum is to reduce costs and keep fractional investing affordable. So I'm totally cool with this. It just makes sure that fractional investing remains free and affordable for everyone. So let's take a look at the purchases I made on June 12th. Purchased Mastercard, Trade Desk, Amazon, Beyond Meat, Moody's, Xilinx, and Illumina, and the only exclusion was Floor & Decor Holdings. So let's head on over to the portfolio. The first stock on my list is Beyond Meat, and I am very bullish on Beyond Meat. I actually raised the target to 12%. And generally speaking, I normally don't want to put more than 10% of principal into an individual stock. But I am experimenting a little bit here, and I decided to boost it up to 12%, and we'll see how it goes. So Beyond Meat has a $9 billion market cap. They sell plant-based meats, and I really feel like Beyond Meat has that same kind of vibe that Tesla has. Back several years ago, Tesla was really at the forefront of two huge megatrends: oil independence and lowering our carbon footprint. Beyond Meat seems to be at the forefront of four megatrends. The first being lowering our carbon footprint. The second being food sustainability. Third, animal health and safety. And four, the perceived health benefits of plant-based foods versus red meats. So my general game plan with Beyond Meat is to just keep buying shares as long as I think that they're going to keep growing and keep executing well. So the next stock on my list is the Trade Desk. And their market cap is $16.3 billion. Their stock has really risen recently. It's pretty close to all-time highs. The Trade Desk is a digital advertising platform. Their CEO has a long history with tech. A company that he founded, he actually sold to Microsoft back several years ago. So he's no stranger to tech. And some interesting news came out earlier this year from Google. Google said they're going to stop allowing cookies on the Chrome browser. And they said they're going to do that in the next couple of years. Cookies are a big deal for digital advertisers. The CTO of the Trade Desk wrote an article basically saying that cookies are an arcane technology and the Trade Desk doesn't rely heavily on cookies. So that news that Google is going to shut down cookies on the Chrome browser doesn't really affect the Trade Desk. So I thought that was really cool that the company has already been thinking about cookies and thinking about the future. They've really been executing really well, and I'm just going to continue investing in them until I see a reason not to. The next company on my list is Mastercard. They have a market cap of $299 billion. So they're a mega cap company. I think that Mastercard, like Visa, just has a huge economic moat. And although they already have a huge share of the market to displace cash, I think that the market opportunity is still pretty huge. And do I think that Mastercard can become a $1 trillion market cap company someday? Yes, I do. I plan to keep on investing in Mastercard for the long run. The next company on my list is Amazon. We all know Amazon. Their market cap is $1.3 trillion. I believe they're the highest market cap company in the world. I mean, they keep switching places with Microsoft and Apple. They're trading close to all-time highs. And I just really love the value that Amazon brings for its customers. You know, the fast shipping, audiobooks, Kindle, Amazon Prime Video, music, AWS. They just offer so much value to their customers, and they're always forward thinking. This portfolio is the only portfolio in which I own Amazon, though. Although I really love how Amazon is executing, they do have a few headwinds. For example, the US government wants Jeff Bezos to testify on the allegations that their company is using proprietary data against their own customers who sell stuff on their marketplace and creating competing products. If this is true, I mean, this is going to be huge. I know a lot of politicians are calling for the breakup of big tech. Not really sure what's going to happen. Like, if they do find that the leadership at Amazon was condoning this practice of taking data from their customers and using it against them to create competing products, that's going to be a huge blow to Amazon. I don't know what exactly will happen. Will they be charged fines? Will they be broken up? Will they become regulated? Just don't know. So it's a huge potential threat, and it's just something to keep an eye on. So I'm not going to go over every single stock that I own in my portfolio today, but some key takeaways are that I'm investing in stocks of companies that I know and understand very well. And these are companies that I think are going to be making a lot more money 10 years down the road than they are today. But one company I did want to talk about is Xilinx. Xilinx makes computer chips, and they are a market leader in FPGAs. They are at the forefront of 5G, artificial intelligence, self-driving cars, and data centers. Although I still like the company, I decided to lower my target to 1%. The main reason I'm lowering my target is that they have some pretty strong competitors out there. They compete against NVIDIA, Intel, and AMD. So I don't plan on selling my shares of Xilinx yet, but I do want to take a closer look at NVIDIA, Intel, AMD, and some of their other competitors. So that's all for today. Thank you so much for watching. If you enjoyed the video, be sure to click on that like button. And let me know, guys, in the comment box, let me know what you guys are invested in. Thank you so much for watching, and I'll see you next time.